Imagine a business where 4 out of 5 customers can't afford what they bought. Not a failing business. A business where that's the plan. Tonight, the payday loan goes on the table. And what we find isn't a scam. It isn't fraud. It isn't even illegal. It's engineered. And it works exactly as designed. Your car breaks down. Rent is due Friday. You're $400 short, and payday is 2 weeks away. The bank won't lend you $400, banks don't do small. So you tap an app. 15 minutes, no credit check, and the money's there. The cost? About $15 for every 100 you borrow. And honestly, in that moment, that sounds fine. $60 to keep your car and your apartment. Who wouldn't take that trade? That's the first thing to understand. This industry isn't selling you a bad deal. It's selling you a good deal, on a 2-week timeline. And nobody's life runs on a 2-week timeline. $15 on 100. 15%. Sounds like a credit card. It isn't. Because that 15% isn't for a year. It's for 2 weeks. Run it out, 26 2-week periods, and the annual rate is roughly 400%. 400. A credit card everyone agrees is predatory, charges 30. Now, the industry has an answer, and it isn't stupid. Nobody keeps a payday loan for a year, they'll say. It's 2 weeks. Quoting an annual rate is misleading. They're right. If it's 2 weeks. 2 weeks later, payday arrives. The lender wants $460, out of a paycheck that was already $400 short. You see the problem. Pay in full, and you're short again. So you do the only thing available. You pay the $60 fee, and roll it over. Another 2 weeks. Another $60. That's the trap door. Not the rate. The rollover. You never fail to pay. You pay every single time. You just never touch the 400. Regulators found most payday loans go to borrowers who reborrow, in sequences stretching for months. Many end up paying more in fees than they ever borrowed. And they still owe the original amount. Which brings us to the thing nobody says out loud. The customer who pays you back in 2 weeks is a bad customer. $60, once, and they're gone. The customer who rolls over 8 times is worth $480. The business doesn't work if everyone repays on time. It works because they can't. So how is this legal? 3 reasons. 1, it's called a fee, not interest. Word choice. That single piece of vocabulary lets the product exist under rules written for interest rates. 2, your zip code decides. Cap the rate near 36%, and the storefronts vanish, the machine doesn't run at 36. Other states allow it outright. 3, the honest one. Nobody solved the actual problem. Millions of people need $400 for 2 weeks and have nowhere else to go. Ban the storefront, and the need remains. That's their best argument. And it's a real one. So this isn't a story about stupid people making bad choices. It's a story about a real need, and a product built so that need never ends. If you're in one right now, here's the ladder. Ask for an extended payment plan, many lenders must offer one, and most borrowers are never told. Try a credit union small dollar loan. Call the original bill, the utility, the landlord, the hospital all have hardship plans. The reason people don't call is embarrassment. And embarrassment is the payday lender's best salesman. The payday loan isn't a scam. Scams break the rules. This one is the rules, written carefully, by people who knew exactly what they were building. Next week, the scam that fooled 40,000 smart people. Until then, check the fine print. Somebody wrote it on purpose.